understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.
Welcome back to another episode of the Tech Behind FinTech. I'm your host, Namdi Oswagu, and joining me is Mike Lavia. How are you today, Mike?
I'm doing well. Thanks for having me.
Man, it's really good. I'm really excited about today's topic. It's how much AI is enough, finding the magic spot in FinTech. Before we hop into the topic and I introduce my guest, we are going to be, when this airs, we'll be streaming from Facebook, LinkedIn, and usually we have a separate stream going from Instagram, but in this case, it'll be Facebook, LinkedIn, and YouTube when this episode airs on September 12th. So without further ado, let me introduce my guest, read his bio, and then we're going to jump into this exciting topic. Mike Lavia stands at the forefront of FinTech and innovation. FinTech innovation, shaping the future of payments and fraud prevention for the digital-first world. As Director of Payments at DataVisor, Mike brings a remarkable track record of leadership across the payments and financial technology landscape, having driven go-to-market strategies and formed transformative partnerships with Fortune 500 financial institutions and disruptive fintechs alike. With a career spanning over a decade, Mike's expertise is rooted in solving complex financial fraud challenges through the power of advanced AI and machine learning. His journey includes pivotal roles at industry leaders such as Cohere, Twilio, and Cisco, where he led enterprise business development and strategic account management, consistently delivering innovative solutions that empower organizations to stay ahead of rapidly evolving threats. At DataVisor, Mike leads initiatives that enable financial institutions to detect and mitigate fraud in real time, reducing false positives, unlocking new revenue streams, and ensuring frictionless customer experiences. His passion for cutting-edge technology and relentless commitment to client success have made him a trusted advisor and thought leader in the fight against financial crimes. Mike's vision is clear: to equip the industry with intelligent, scalable solutions that adapt as quickly as the threats they face, building a safer, more resilient financial ecosystem for all. Sounds good, man. Let's
Sounds a mouthful, but thank you.
Yeah, man. It's all good. I was like, you know what? It really sets the stage to really diving into this topic, because right now, as you see in the industry, man, it's an AI arms race, right? Like AI guys at Meta, they're getting sports money right now. It's like hundreds of millions of dollars. So everybody wants to be on the top of it. Big firms, small firms, fintechs, everyone wants to say, we have the latest AI. So the question is, how much AI is enough?
Well, I think in order to fuel this conversation, I think it's important when we talk about AI, because AI is such an umbrella term, right? So yeah, I think we decouple this by talking about two different aspects of it. One of them is generative AI, which we all know ChatGPT and some of the competitors there. And then you have machine learning, right? So these are models that are designed and trained based on either known fraud use cases, or there are models that are developed with algorithms that understand anomalies in data and can identify those anomalies and group together fraudulent attacks and help you identify those much quicker. So it's really finding a balance, right, between those two avenues. Gen AI is really generally leveraged for productivity enhancement, while machine learning models are generally to expedite the detection of fraud, right, especially when it comes to unknown fraud. And so there's those two avenues, and balancing those correctly within the way you deploy to customers, the way you engage with customers, the way you deal with, when there's a fraud attack that gets identified. It's the balance between those two aspects and how you first of all mitigate the situation, but then how do you resolve that issue for your customers, right? And so When we talk about how much AI is enough, a lot of it's going to be dictated, specifically in the fraud space, it's going to be dictated by the fraudsters and how much AI they're implementing to create these social engineering exercises, to spoof identity, take over accounts, and it's not so much about back in the day when we used to get a fraudulent charge on our card, like at a Best Buy. You get a call and you say, hey, that wasn't me. You hang up, it gets expunged. Done. Now it's social engineering is really about, how do I mimic Bambi as a person so I can get into his accounts, I can start moving his money around and pretending that I'm him. And that's really the goal around a lot of these fraudsters and these teams that come together to then try to impersonate people, whether it's a financial institution that they're impersonating or whether it's an actual person. That's where most of the struggles are coming in terms of how do you mitigate that in a quick way that does not affect the customer themselves.
It's challenging because, as you mentioned, right, from the threat actor side, they're also evolving, and they're using, they're using the same tools for a negative impact, right? So now, on the defensive side, you're like, okay, you have to also keep evolving to keep up, or it becomes unbalanced. As you mentioned before, right? This isn't as simple as, okay, identity theft. I think back in the days, like we're talking the late 90s, or someone took my wallet and all of a sudden they pretended to be me and went to physically went to the dealership and bought a car in my name. It took me years to get that stuff off. Now it's totally different, in terms of financial crimes, as you mentioned, right? A lot more sophisticated, more remote. So you can have someone in a foreign country controlling your identity and doing things on your behalf. What are your thoughts around that?
Yeah, it's going to be, first of all, with all of these breaches that we see in the news, right? Our data is out there, right? Whether you like it or not, our data is out there. This is the data that fraudsters are using to essentially take over your account, impersonate who you are as a person. And so it's extremely important as we look to solve the problem of becoming more real time, right? The challenge today is that most organizations, they have a ton of data. It's not organized data. It's not structured in any way, but they have the data. And for them to, first of all, identify a threat, it either has to be during data analysis, which happens maybe quarterly, or during a customer calling in and saying, hey, there's a problem with my account, or money's missing, or whatever it is. But in both of those cases, the fraud attempt and the cost to both the consumer and the financial institution, that event is over. That money is gone. The fraudsters already moved on, and they're planning their next attack, whether or not it's the exact same algorithms they use to attack someone else, or they slightly change that algorithm, right, to initiate a different attack, so that you're sitting here plugging holes. You're playing a game of whack-a-mole while the fraudsters are continually popping up, looking different in every attack, right? And it's hard for you to pivot quickly enough to identify those fraud attacks. So there's two things, right? A lot of these customers already have the data, so I think it's important to identify, one of the key components of modernizing your approach to fraud and minimizing risk and improving customer experience is to leverage that data. Now, how do you do that? There's generally large organizations, sophisticated organizations have disparate systems. Data in each system is not even structured the same way. So if you just did a big data dump into a big data center, there's no way to make sense of it, right? And so there's the structuring of the data component, and then there's aligning the data to a what we call a DataVisor, a unique identifier. A lot of fraud platforms do that. But essentially tying all data signals of your activity, Nambi, together, whether or not you're using a savings account, whether or not you're using their credit card, debit card, if you're applying for a loan, consolidating all of those signals, tracking your entire life cycle as a customer of my financial institution to ensure that I'm protecting you regardless of which service you're using, right? And more importantly, leveraging the data of your own, right? So your normalized behavior, update identity information allows AI, specifically machine learning components, to then identify anomalies when somebody's trying to take over your account. It can actually identify that anomaly, saying, hey, no, this is abnormal behavior because we've orchestrated all this data, all of these signals that we know about Namdi as a customer, and we're able to create what's called a risk score for Namdi. And so as behavior continues, within the platform, as transactions are coming through, you're able to track not only your behavior as a customer, whether you're a good customer or not, but any anomalies which could be identified as a fraudster. So creating those alerts, identifying, hey, something's blocking the transaction, and then reviewing that alert to help, either identify if it's a false positive, meaning a customer was declined inaccurately, or whether it's an actual fraudster. And that's where the manual review component, and this is primarily where a lot of organizations get bogged down, is with manual review work of these alerts because of the increase in velocity of fraud attempts because of the enablement of AI. These alerts that are getting created saying, hey, we think this is fraud, and it creates a case for someone to go and review and identify if it's fraud or not. People can't keep up with that. They're not staffing. Fraud teams are not staffed enough with analysts. And so that's where AI gets applied to help review those cases as well. But it's not foolproof, right? And so the important component of this, as you're looking at adopting AI, as you're looking to modernize your approach and implement the right strategies for your business and your customer, taking into consideration, obviously, the customer experience, right? You want to ensure your customers are having a great experience with your product or service. Protecting them throughout the entire life cycle is extremely important. Making sure you have all the data signals that you can actually rely on to protect that user. And then increasing productivity on the back end to review these cases much quicker will also lend a hand to improving customer experience. So, it's the application of machine learning models to get to real-time identification of fraud alerts as much as possible, or fraud events as much as possible. And then leveraging the power of Gen AI, because that technology is advancing so fast, leveraging that power to then increase your productivity on the operations side, right? You can use Gen AI to review cases. You can use Gen AI to engage with customers to collect more information before you review the cases. And so expediting quicker can identify, and you're being more proactive as a financial institution to identify the fraud, then communicating that out to your customer so they feel protected, right? We're talking about increasing customer experience. So not waiting for the fraud instance to occur, not waiting for customers to lose money, but being proactive, stopping it at its foot, like before the transaction even occurs, stopping it, notifying customer, and then resolving that situation. And then you start that process all over by iterating on the strategy to plug those holes as you go.
These are all great points that you brought up. So I want to dive into the Gen AI versus the machine learning in that fraud pathline, in terms of how it's working from the financial organization perspective in leveraging their internal data, but also, as you mentioned, on the operation side. So based on the scenario that you just laid out, right? We could do a use case right now.
Sure.
Customer A, we'll call him Bob, right? Bob gets let's do a false positive, right? So Bob is in vacation, I don't know, in the Caribbean somewhere, right? He's having some fun. He's on a cruise. He's hitting different islands. All of a sudden, it pops up as an anomaly because Bob hasn't vacationed in years. He didn't alert his credit card company prior to going on a vacation that he'll be out of the country. So right now, it seems like a fraudulent alert that someone in another outside of the U.S. is using Bob's credit cards to buy daiquiris and a whole bunch of Hawaiian shirts, right? So in terms of the technology that you just referred to, in terms of the machine learning and the Gen AI, in what scenario, which one is being used in that scenario?
Yeah, so it could be any. So let me walk through that workflow in terms of what's happening on the back end or what's most likely happening on the back end.
Yeah.
I have the data on Bob. I know Bob doesn't leave the US ever. So I have this profile of his behavior, transaction in the US, not a big deal. All of a sudden, randomly, you see one, when he's on vacation in the Caribbean. And you might just have a catch-all and say block, right? But you don't want to you don't want to leave Bob stranded, right? So you can't shut off the credit card. You can't prevent him from living his life, but you can reach out to him proactively, right? So this is where AI agents come into play, right? Because you can essentially create a much more efficient contact center within your organization to actually reach out and engage to a customer to ask, hey, was this really you? I noticed there was a transaction. Here's the store. Here's the dollar value. Was this you? Yes or no? Right? And they can say yes or no. And either, depending on how the payment processing, on the back end is architected, you can either approve it without him having to reswipe card, or you can just say, hey, please try again. We've updated that you're now in the Caribbean and you should be okay to go. So, that's a fairly simple use case, where, that's an anomaly. The fact that, hey, that card popped up, right? And there's also two different aspects of using your card, right? There's card in hand and there's card not present, right? And so generally, if you're a card in hand, right, and you're using a chip card, you generally have a lot more information. You know that the card's there. There's been no issuance of a stolen card. So if it's card in hand transaction, generally you should be okay. And technology has gotten much more advanced to the point where they now can see the patterns of travel and whatnot to understand, hey, is this a high risk transaction or not? Now, if it was, getting daiquiris and then all of a sudden buying a car, that most likely would trigger some other rule or would trigger some sort of risk alert. But generally in those smaller, buying daiquiris at, $8, $10 a piece, generally they have enough information to resolve that pretty quickly. There's technologies today to allow you to just reach out either over text or a phone call, and you can resolve those situations pretty easily. The challenge is like somebody, Bob's in the Caribbean, somebody in the Philippines is texting him saying, hey, I noticed you had a transaction recently, right? Using AI to kind of, create a personalized message for this person. Please log in to validate, right? And send a link. Bob says, okay, well, I'm traveling international. I really don't want me, and this is where social engineering comes in, right? Generally with the older population is they trust and they click the link and they go in and they put their username and password. All of a sudden there's a takeover situation. Now Bob's in the Caribbean, somebody's moving money out of their account or moving to, other accounts. And that's really where the real problem occurs for Bob when he's traveling is not buying himself daiquiris, but it's being overseas and being a victim of some social engineering fraud scheme. That's the challenge, right? And so, so again, going back to the social engineering, if we know that, if we know, there's a transaction, we know, Bob, there's an update in our system that Bob is overseas. There was an international transaction. All of a sudden, somebody's logging in. There's a login event to our system from another country, right? You can create geo rules around that. If they're getting crafty and, maybe they know he's in the Caribbean and they can use some proxy that shows that they're in the Caribbean. And so we can collect device behavior information to identify, hey, was this actually Bob's device logging in? So there's a lot of different signals that we can collect at the front end to try to create this risk score to identify if this is a risky transaction or not. And generally the risk, I'd say the overall risk score that you're creating for these customers, the more data you have, the better and more true that risk score will be. And the better you can actually serve customers, the better you can actually block these transactions. The Gen AI component generally comes down mainstream when you're trying to operationalize, right? So maybe fraud situation happened, maybe you blocked it, maybe it got through. But the Gen AI is really to help identify reach out to the customer, try to help resolve things. Gen AI is then leveraged internally to review cases, right? So you can train Gen AI to review cases and kind of automate that whole process. And then we also use Gen AI in our platform to help fraud analysts review rule performance much quicker. So Gen AI is actually analyzing data that generally takes 2 to 3 weeks for analysts to actually get the data, structure it, then analyze it to figure out, hey, is this rule actually working for us? Is this rule protecting our customers? And Gen AI can actually be applied to evaluate those data points and then suggest new rules for you, suggest different threshold changes to actually improve the performance of that rule, depending on what the outcome is, the desired outcome. So in that flow, and depending on how complex that transaction is, right? And depending on what type of transaction is, depending on who the customer is, the different technologies can be implemented in the workflow at different times during the transaction.
No, that's interesting. So on the Gen AI front, it's leveraging some internal large language model that the institution has, along with external data to augment the interaction, and it's acting from an operational standpoint, as you mentioned, acting as it can be like the help desk or support directly back and forth to the customer, natural language, so the customer thinks it's talking to a real person, in addition to working internally with the analysts to help them like comb through tons of data to produce reports and assist them with their analysis. Is that accurate?
Absolutely. Yep. Correct.
Okay. So understanding that aspect now, thank you for that. Now help me out with the machine learning aspect and the models. And let's use our guy Bob, right? He's on the adventure of his life. Similar to mom went on vacation about I think it was like was it last year or early this year? Anyway, on her way back, she went overseas to Australia. On her way back, she clicked on something, and you know, I've trained her, and I think as soon as she clicked on it, she knew she messed up, and someone took over her WhatsApp account, and then they start asking family members all sorts of she's stranded, she needs whatever, and I'm looking at it like, yeah, right. So that was a whole thing, but she knew, okay, I clicked on it, so she's extremely cautious. So now Bob, similar to what you mentioned, right? And it's always curious. And you know what? Before we get into that, it's like, how do they even know you're away? And I'm thinking of random ways they can know if they got access to your email, got some sort of information detailing your travel. Anyway, Bob now clicks on it on one of these links. Help me out. Help me build a scenario in which it can get a lot more complicated for Bob. Whether they take over, they take over his various emails, start sending things out to his family members, asking for funds that he's stranded. Also, they somehow now gain access to his bank account now, and they can now start, you know, like you said, they're using a proxy. They have VPNs on their end, so they can. It may look like they're in the same location as Bob doing these, and not in the Philippines or somewhere. What other scenarios can we use for this use case for Bob, and then let's detail how it works on the back end from a ML standpoint.
Yeah, and this I think plays right into the message around orchestrating of data signals, right? So, you know, we're talking about Bob. That's a very that's one transaction, that's one person. But these fraudsters aren't just going after Bob, right? They're going after Bob. They're going after, you know, 1,000 other people that are identical to Bob, right? And so generally where machine learning comes in, so first of all, there's two different types of machine learning models that are applied in the fraud space. One is supervised machine learning, which leverages known fraud use cases. So I have a bunch of data. I know what fraud looks like because I have these transactions. I've labeled them as fraud. I can go and train a model to essentially, mitigate fraud or identify fraud in a much quicker fashion, right? So models replace essentially thousands of rules that you would normally have in to try to identify fraud. So you can just plug a model in there and you can refresh that over time as you start to understand more of the fraud trends occurring in your business. The problem with SML is, so supervised machine learning, SML. The problem with SML is it's still delayed, right? We talk about real time, but the model is actually identifying fraud in real time, but it's not identifying unknown fraud threats. It's only identifying fraud that it knows about, right? And so if a transaction comes through that's under the machine learning model that is just identifying fraud that we already know about, then you get into the anomalous fraud detection, right? Which is where unsupervised machine learning. This is a different type of machine learning algorithm that doesn't require labeled data to train it. So it's architected, and the algorithms that are designed within this model are designed specifically to look for anomalies within data specific to fraud. So you have to have a UML model that is trained for fraud, but then also trained for the financial institution that you're delivering this model to, right? Because it has to be, tweaked for their specific business outcomes. So, there's this ensemble approach when you talk about Bob, and then, account takeover is an extremely painful process for people, right? Because the problem with account takeover is I look like Namdi. I look like Bob when I'm signing in as a fraudster. I'm starting to move money around. I might even be on the phone with you, telling you what to do, right? So it looks like you on your own computer doing all these things, creating, doing fraudulent payments, moving money around. And so it's important to leverage what we call an ensemble approach, which is the combination of machine learning on the front end, right? So the structure, or the supervised machine learning plus unsupervised, creating this ensemble so you're identifying the known fraud attacks very quickly, but then you're identifying the unknown fraud, right? And one of the biggest problems for most organizations is, how do I keep bad actors out of my platform, right? And so how do I protect Bob generally? Like if Bob's a really good customer, there's a whole other group of customers that we have that are really good. How do I keep the bad actors? How do I keep the fraudsters out of my platform? And so a lot of people are focusing, fraud detection at the front end of signing up for the service, whether it's opening a bank account, whether it's signing up, for WhatsApp, whether it's signing up for, a new investment account, trying to keep the bad actors out at the the point of what's called customer onboarding, right? Or sort of application process. And there's a lot of things you can do there to actually mitigate that. And so for Bob's case, trying to keep these users out of the system, right? And making sure that these guys aren't like sleeper cells within your platform that then come out of the woodworks and start doing fraudulent behavior, right? And this is where UML generally gets plugged in, is for these coordinated fraudulent attacks, where let's just say I have a team of fraudsters, 30 of them. I tell all 30 of them to go and create accounts at various financial institutions. And they sign up in proper credentials. They load their balance, $500. They make, bill payments. They look like really good customers for 6 months. All of a sudden, there's a coordinated attack where, they're going after, they're moving money between accounts. They're trying to, they're trying to go after Bob to move money into this account at your bank, right? And so then there's this coordinated attack within so they're already in your system, and they're creating this coordinated attack. And that's where people need to get better, is identifying those coordinated attacks much earlier, right? Because by the time, like generally today, in many financial institutions, they're identifying these emerging fraud threats. They're getting better at doing it quicker, but it's about 2 to 3 weeks, sometimes up to a month before they implement a net new strategy for that fraud strategy or fraud threat. And then by then, the fraudsters have moved on and they've iterated and they're doing a different attack, right? And so it's important to try, in order to try to stay ahead of these types of attacks to protect folks like Bob, that's where the anomaly detection machine learning model really, really help to drive the real-time aspect of identifying these types of, crime rings, right? So it's not about just looking at Bob individually in that transaction. I mean, it's an $8 transaction for a daiquiri. Yeah, if somebody wanted to, defraud Bob for a daiquiri, then maybe that's not a high priority. But it's generally these coordinated attacks where I'm going after you, Namdi, for $200. Then I'm going after 1,000 other customers for $200. All of a sudden, I'm gone with, $500,000. You know what I mean?
A lot to unpack there, so I want to get into it. So I like the direction, and there's so many different questions I want to ask you to really fully understand stuff. All right, the first one that you mentioned, right? supervised versus unsupervised learning. So with the supervised learning, those are in the example that you mentioned, right? We are leveraging cases, known fraud cases, right? And we're using the model to traverse through those lists so that anything that looks similar, we can quickly identify and get on top of.
Correct.
Now, the unsupervised learning are for anomalous behavior, totally net new. I can make an analogy in the Microsoft world of vulnerability where it's like a 0-day attack, right?
Yeah,
It's not new. We're trying to figure it out on the fly, real time. So I'm clear on that, right? Now, the next thing that you mentioned that I find really interesting, especially for fintechs who are extremely pressed to get users, right? That's their goal, right? They want to increase their users. And sometimes in that rush in doing so, 30 new accounts being open or 100 new accounts being open and you're in day one looks marvelous. It looks great, right? You because you want to report these numbers to your investors and so forth. But the fraudsters knowing that, right? They know that's an incentive. Now, why would, right? Like, because the fraudsters are creating, I get it, but I want to break it down. Why would the fraudsters now create all these accounts on this platform? They're in it now, but they're not impersonating anybody. They're using they might be using a false identity or somehow, but they're legit users now. Can you go over why is that advantageous to their end goal?
So, first of all, they may not be who they are, right? The person that tried to impersonate you and buy a car, actually, it sounds like it was successful. It was, they could go and create a Namdi account at a small community bank, right? So they're in the state of Arkansas, they live there, and they want to create an account. They use your credentials. Yeah, everything checks out because you are who you are, and they get access, right? And they might be able to use that account to move money around. The challenge here is, first of all, they're impersonating you, so they could actually go and create these fraudulent attacks, right, under your name. But then they could start attacking other people at the credit union or at the bank or at the fintech, and that's really what they're after. And it's really around a coordinated attack, right? So once they're in, it's more about getting numbers within that system or that software stack, whatever, getting a number of fraudsters that are working together to then create a coordinated attack. Whether it's moving money around within accounts and then trying to move money out into another system. A lot of credit unions, there's marketing promotions where, hey, Namdi, you sign up, I'll give you $500. So grabbing that money, looking like a good user, and then bouncing. There's a lot of different things they can do once they have access to the system. So they can either impersonate you to get access, or they can just try to take over your account as the person and then play around with your money as well. So in terms of how they get the money out, they're poking and prodding, just like a 0-day attack. I think that was a great analogy, right? They're poking and prodding to see where the holes are and what they can get away with. There are many cases where a fraudster tries to do a fraudulent transaction, it gets declined, and they just walk away. They're done. They're moving on to the next customer, right? So it's just like these attacks where they're just poking and prodding, using AI to actually create these scenarios where they're just, these bots are just going around poking and prodding to see what's going to take. And then they go and they, once there's a hole, they'll go in and start creating these attacks.
What I'm trying to wrap my head around, and help me, because you see this. I want to wrap my head around that aspect of a coordinated attack. Like, if we both are in the same credit, Mike and Mike, we both have accounts in the same credit union. There's a ring of fraudsters in this credit union. Our account, I don't see your account, you don't see my account. I don't see their account. They can't, without getting my access, they can't see my account. I'm trying to understand, how is it once they're in, how are we as users or customers in that credit union, how are we impacted? That's what I want to understand.
Yeah. So generally for coordinated attacks, they're attacking the bank, the financial institution.
Okay.
They're not attacking you as a user.
Okay.
That would be a different use case where I'm asking you, hey, Namdi, send me I'm sending you a fake message saying, hey, you owe me $1,000 for some service and click this link and send me Zelle. Like that's a completely different type of fraud use case. But the coordinated attacks are going after the financial institution generally to take funds away from them, whether it's padding balances, and then moving that money around as they're writing checks, right? So I get an account, I get my checkbook, I start issuing checks. Yeah, the money's in there, but then I take the money out before the check clears, right? And so there's a lot of things they can do with that account once they're in.
Okay, yeah, because you mentioned, taking advantage of the reward system, taking advantage of, you have this account for 3 months, we'll give you $100, but seems small from an individual standpoint, but if it's coordinated and you have many of these accounts, then that number can get into the tens of thousands, even hundreds of thousands. Okay, I get that now.
And that kind of ties back to your question about growth, right? Fintechs are under immense pressure to grow continually year over year, right? So how do you grow? You get more users, right? And so you run promotions, you get as many users in as possible. And so generally, this is where a lot of the problems start for these fintechs is allowing the bad actors in. And so a lot of them are focusing on the front end, right? Trying to keep them out. But then, there's different AI aspects, applications for AI during the actual transaction process where they can, create a better system to actually identify once these fraudsters are in, and then they're trying to manipulate the system somehow, right? And so there's different aspects and different parts of the journey, right? It's not just like, hey, Namdi's account and Namdi does these transactions. It's like this whole journey of data and collecting it and looking at it holistically to identify where the fraud's actually occurring and helping to protect not only the business, but the consumer as well.
So now going with that scenario, because I really like this crime ring scenario, so I want to really understand it now, especially as it impacts fintechs in terms of getting new users. Now, we have all these things on the front end, right? You have the KYC. I mean, you have actual regulations and standards around it. So you have KYC, you have certain, AML standards, anti-money laundering standards that have to be impacted. So when you have all these things in place, right, how are they still eluding those systems and getting in? Can you help me understand that?
Yeah, so let's decouple fraud and AML. AML is regulated, right? So the BSA, at least in the US, there's the BSA that dictates essentially the reporting requirements, right? So trying to crack down on institutions moving money for criminals around the world, right? And so, that's heavily regulated. Fintechs, I think it's important to understand when you sign up with a fintech or a digital bank, they generally don't have a banking license, and so they have what's called a sponsor bank, and that's a bank that's essentially allowing them to use their money services license or a money transmission license to move money for their customers, but the bank is actually doing it on their behalf. And so sponsor banks actually have oversight of these fintechs. So the real risk by either allowing too much fraud or not complying with AML standards and regulations, the risk there is getting shut down by your sponsor bank. And then you have to go and find a new sponsor bank, right? So there's a real impact to their business, right? If you can't process money, you're pretty much out of business. And so there's that aspect of it. And so as, once these fintechs, right, they're trying on the growth side of things, right? Everything's tied to revenue. The financial institution sets their own risk tolerance on the fraud side, right? There's still the business impact component of it where they could get shut down, right? Yesterday, there was a news report that came out about Zelle getting sued by the state of New York for negligence of, it was something of the upwards of $1 billion of consumer funds was lost, right, through Zelle. So the lawsuit was really around, hey, we find them to be negligent in actually protecting their consumers. And so obviously, that's an early stage, but that just came out yesterday. So there is a big impact, right? And so there is it's kind of like the sausage making, right? There is a fine balance between declining all transactions and protecting your business, or letting all transactions through and customers just take off because you're not trustworthy. So it's that in between, right? And how you massage that strategy for your business as you look to, like, if the board comes to you and says, look, we got to grow by 50% next year, you guys are going to have to go and put a marketing strategy together, a product strategy together. But all of that needs to be taken into consideration on the fraud side of the house, right? So it's extremely important that the fraud operations teams gets involved in these types of commercial strategy sessions, because they're going to take the brunt of the fraud issue if marketing just starts promoting $500 per user and the fraud team doesn't know about it. They're just going to get crushed on fraud, right? Mm-hmm. And so it's important to implement these strategies, test them out before you actually go and start, increasing users and whatnot. Otherwise, you're going to, get these, user bases that are going to have a significant amount of crime, right? And so, these reports come out that say, 95%, 99% of our transactions are good transactions, and that's great. But if your user base, is 50 million people, that's still a lot of fraud happening and a lot of people getting hurt. And it's generally people that don't have money, right? So it's extremely important for these financial institutions to, and again, fintechs run pretty lean on the fraud operations side. So it's extremely important, right, for them to start implementing strategies as they're looking to put in kind of new go-to-market strategies. And then also apply AI to help them become much more operationally efficient to serve their customers, review fraud alerts, understand why there's fraud alerts. And that's, generally how they can mitigate, fraud on their platform. And it really does start with the onboarding process. And KYC, you brought up a good point, because there is a lot of, there are a lot of identity checks, right? Background checks that you can do on a user during the point of onboarding. And a lot of customers do that. But I get back to the point about disparate systems and fragmented data. I might have a system for onboarding, right? And you engage with that system. You're doing an account sign up. It's going through one system. It's doing a KYC. Hey, you look good. Everything checks out. But then I have a different system that manages all your accounts, or whatever the platform you're using, where you apply for loans or where you move money around. And these two systems don't talk to each other, right? And so, if you're saying, hey, this is a good actor on one system, you're noticing all this fraudulent behavior, like you can't connect the dots. You're not able to put a holistic fraud strategy together to protect this one customer. And so there really needs to be the tracking of data, tracking of your journey as a customer throughout the entire process, from the initial engagement with the customer, onboarding, and then doing all the financial transactions, and protecting them at every single point of that journey within your platform. And that's really where the orchestration component comes in, where you find that balance between machine learning and where you apply Gen AI for productivity and things like that.
So, I mean, this is really insightful, right? Because as we're talking, I'm thinking about a new fintech, less than a 10-person team, and usually with that type of lean startup, they don't have a fraud department. They barely even have a cybersecurity department. So, they have this product that add tremendous amount of value to their customers, but they need customers. They want people to sign up. It seems to be a hot thing. It seems like, oh wow, people actually like using it. It's early stages, but it's like, wow, they have a niche market they target, and it's catching some wind, right? What's your advice to them as they start to scale up in terms of their users, but their team is small, right? They don't have the necessary resources. Their CTO may handle the cybersecurity in addition to a consultant or a contractor here and there, but they're building that team out. What's your advice to them in what we just talked about to mitigate their risk on fraud in the early stages?
Yeah, I mean, whether your team is, whether there's one person that's responsible for fraud at your company, or whether you have a team, of 30, right? Depending on, how big you end up getting as a fintech. I think it's important to understand the connection between fraud and the customer experience that you ultimately want for your brand. So what generally happens with small fintechs, right? Because they don't have a massive user base generally at the startup phase, they generally put in rules that I would say decline more than approve, right? And then they'll go in and they'll do manual review. They have spreadsheets and whatnot, depending on where they are. But generally, they start with spreadsheets and they go through and they analyze data and then they decide whether it's a fraudulent transaction or not. Obviously, not a scalable solution. So it's really important for them, even at a small stage, to look at fraud as look at your fraud strategy as a tool to improving revenue over time. Protecting the business, right? So making sure fraudsters don't get in, but also having the right system that's going to reduce friction for their customers, right? If you want growth, the worst thing for you is some friction, right? Customer friction. Otherwise, people don't have the attention anymore. They hit one wrong turn and they're gone, right?
Yeah.
It's funny. I was reading an article the other day. They were saying, and this actually shocked me, but people that if somebody gets a transaction declined, 42% of them don't try again. They just walk away.
Wow.
So if you think about like abandoned carts, abandoned applications, right? False positives become a revenue inhibitor, right? Versus a protector of your business, right? So it's actually hindering your business, right? Doing the exact opposite. So it's extremely important to have a system in place that is flexible enough to allow you to iterate, right? The reason that fintechs exist is because they're digital native, right? They can offer services that traditional banks cannot, right? Because they're lethargic and they're massive and they have, crazy systems. Fintechs can just be a digital native layer on top of banks. They can be much more faster. They can onboard users faster. They can provide services faster. So in order to keep up with that speed and still serve your customer and make sure they're protected, having a fraud platform that can keep up with that, right? That can iterate at the speed that you're iterating as a business, right? Is extremely important. And having a platform that allows you to leverage data from multiple systems. So ingesting device intelligence data, ingesting KYC, ingesting, ID verification, ingesting, if it's a check deposit, making sure that you have a good signal on whether that check is valid or not. And making sure those aren't disparate systems, right? That's the most important part. Is a lot of companies have a lot of these systems in place, but they're point solutions. Again, I talked about whack-a-mole. So they look at one system, they go over here to check another system. It's a very, very slow process. And so having a system that can bring all of those signals together and apply AI in an intelligent way to help automate much of those while allowing you to iterate on your fraud strategy as you need to, as marketing comes up with new programs, as product wants to release new services. It's extremely important for them to invest now than when they grow to maybe the 10 million mark and they've grown the fraud team and everyone's used to a spreadsheet process. It's really hard to transition that. It's really hard to then keep up with the business and the amount of fraud coming in because you're trying to grow so quickly. So most organizations look at the fraud team as OpEx, right? It's a cost center. But my recommendation, and I talk with customers all the time about this, is to look at it as a way to unlock new revenue streams, as a way to improve your revenue, to protect that revenue, right? It's just extremely important, especially because they're getting graded on this every quarter by their board or by shareholders. So it's extremely important to leverage these new age systems that are using AI in intelligent ways, but more importantly, orchestrating all these signals together so that you have this holistic view of your customers. And that, I think, is the most important thing that these startups and new fintechs need to realize, is that your fraud strategy is no longer just a cost center. It is a enabler of revenue, right? It's enabling you to go out and generate new revenue sources without creating pain for customers or creating significant losses on your business with things like that.
I have another question around that, but before I get into it, I have a security background, and for fintechs, I say the same thing, right? Like, change the mindset of looking at security, as you mentioned, as a cost center or OpEx, and look at it as a sales enabler, especially when you're a B2B fintech, because when you're trying to sell to a bigger institution, a part of a bigger institution, they're going to do their due diligence, and when your sales team does the best job ever to actually get 80% of the deal, that 20% of due diligence, when they start looking at security, that becomes a sales enabler at that point. So when you said what you said about fraud, I smiled because I was like, I used a similar mindset. So back on our analogy with when you're talking about small fintechs, a lot of them leverage third-party systems that have their SOC 2 compliance. They have all these different standards, right? So they're just leveraging their API. In those scenarios where the actual financial transactions are taking place on a third party, what is the risk of fraud as they get users in? If the KYC and different things should be handled by those systems that they depend on, how does that work in terms of fraud and in our fintech example?
Maybe refresh the question for me, or sorry, you asked. Yeah, sorry.
So in certain cases, when you have a startup and a fintech,
yep,
they're the face, but behind the scenes, they're actually leveraging a partner's financial services, right? So from the front end, the user or the customer thinks it's handled by fintech A. But actually, fintech A has an API, application programming interface, being called to the actual back-end financial services platform that they rely on. In that instance, the mindset could be, well, that institution, who's a unicorn billion-dollar company, they're handling the fraud. I'm bringing in the users in it, so I own my users, but the actual financial transactions are going to them, and they have the necessary resources and things in place. From a fraud side, are they still responsible? The front end fintech, do they have to invest in it? Like, how does that process work?
Yeah, so the financial institution would have their own fraud program, right? And that generally is, most of these banks have a sponsor bank program. They will, they'll either leverage the same fraud tooling that they have for their core banking services, or they may have a separate fraud program or a fraud platform that they leverage specifically for sponsor banks. So the one important thing from a sponsor bank perspective is oversight, right? They want oversight over these fintechs, make sure they have a good fraud strategy, because they are on the hook for financial loss as well, right? They're ultimately the ones moving the money. If that money's gone, they can't recover it. The bank is at a loss, right? Again, the agreement with the payment processor could be whatever they've commercially agreed to, who's at fault and whatnot. But the ultimate pain here for both the large financial institution and the payment processor, the biggest pain is losing that customer, right? That is a revenue loss for them, right? And so if this keeps happening over and over, it's extremely painful for their business. The sponsor bank is going to say, no, we're not doing business with you anymore. And then that fintech's at risk of losing their entire business and customers. So generally what happens, and we actually, we have a really good multi-tenancy setup for our platform. So we have the ability, and the nice thing is with payment processors, we do really well because they typically, they're serving merchants as well, right? So, they might have a merchant that's using them as like a card processor, for instance, and then the card processor has their sponsor bank. The multi-tenancy setup allows all organizations in that chain, right, from customer swiping their card to bank processing the actual transaction, allowing the entire flow of data to be tracked and allowing each organization to set their own rules depending on what works best for their business. And so I think that's extremely important because there's a lot of players involved when you swipe your card, right? You're using a POS. that POS is just a software company. They're sending that transaction to one of their financial institutions. Like they generally have a payment gateway that they've architected, depending on cost and everything. They're routing your payment to whoever they think is best at that point, or, with availability and whatnot. And so it's extremely important that everyone has line of sight into what that fraud situation is happening, right? So the bank will be able to see where, the bank will have oversight into all these platforms, all the data to see where this fraud is happening. So it's a collective effort on the part of the fintech and anyone in that line of transaction, right? All the way to the financial institution that's backing them. And so that, that's generally the process of, generally where ultimately you want to stop it at the point of transaction. You want to stop it before any transaction occurs, right? That's the ultimate goal. But then if that actually gets through, there's checks and balances at each step to hopefully stop that transaction, right? By, collecting more data and whatever. But fraud still gets through, right? And this is where AI can come in and kind of, help these organizations become much more real time, right? To identify these fraud threats. Because, sending a case, like if I'm a payment processor and I identify fraud, sending it to a bank, like that's a week and a half, 2 week type review process. By then, fraudster's gone. Maybe it was fraud, maybe it wasn't. And so just, down the line at every checkpoint, orchestrating all that data, making sure that everyone is using the same data to actually identify fraud will actually improve the process along all the chains.
Mike, man, this was a really good conversation. I took away a lot. I mean, we had different fraud episodes in our past. I took away a lot from this one. I mean, thank you very much for walking through these different use cases, because if you're not necessarily doing this on a day-to-day or not in this, you're not really thinking about it. So I really appreciate this conversation because you made me, think about different things to look out for, especially in early stage fintechs and so forth. I really like the scenario we did with the multiple account, the coordinated threat actor attacks when they're opening different accounts and so forth. So, thinking about this stuff is really, really interesting. We have a tradition at the end of our show in which, I'll come off stage and let you talk about your company, how people can find you and so forth. So I'm going to do that right now.
Sounds good. I appreciate the time, Namdi. It was a great time with you.
Thank you.
So if you're interested in learning more about DataVisor, we are an end-to-end real-time fraud detection and risk management platform, leveraging both machine learning models as well as generative AI to really complete the entire journey for detecting fraud across all of your products and services. You can learn more about us at datavisor.com. That's DATAVISOR.com. And you can either read up about what we have to offer. We're really focused in on the mission of helping financial institutions or anyone that is in the process of, in money movement use cases. We are really on the mission to modernize that whole process to protect not only their business, but also the customers as well. So I encourage you to come to datavisor.com, learn a little bit more about our platform. There is a contact sales button on there that you can select if you do want to talk to someone in sales. There's also webinars that you can become a lot more engaged with our speakers and learn a little bit more about trending fraud and things like that. So encourage you to come and check us out. Thanks again.
Yeah, good stuff. Good stuff. And look, when I have a new guest on and we have a great conversation, I'll call you a friend of the show. And sometimes something may come up in the industry regarding fraud, and we may want some questions answered and just have a conversation around it. So definitely reserve the right to contact you about that and bring you on, and you can walk us through certain scenarios. So
absolutely, yeah. Happy to share. I really enjoyed this conversation. It's funny, an hour went by really quick. There's so much more we could dive into, but we'll leave that for another day.
Yeah, I was definitely looking. I had some more questions, but then I was cognizant at the time, I wanted to be respectful of it. And when you go down these rabbit holes and you're uncovering and the workflows and different things of that nature, it can lead into other topics, and,
Right.
and the web starts going, in different directions. But definitely appreciate your time today. Like I always say at the end of our shows, whether you're watching the show when it airs, whether you're watching it the next day or the next year, we appreciate your viewership. We appreciate the messages you send us. If you want to keep up to date with the Tech Behind FinTech and our guests, you can go to the techbehindfintech.com/subscribe. We have a weekly free newsletter, and you'll get FinTech news. You'll keep your hand on the pulse of FinTech, and you'll also get info on our upcoming guests and so forth that you do not want to miss. These are industry insights that you're getting live on the show or when it airs every Friday, 12 p.m. Eastern Standard Time. Mike, once again, it was a pleasure meeting you, pleasure talking with you. You are, as your bio read, you're a true expert in this field, and I look forward to future conversations and learning more from you, man.
I appreciate it, Nami. Look forward to next time we chat.
Yes, sir. Have a great day.
Thanks, you too. Bye-bye.
Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.